morning, good evening, good afternoon, students and traders all around the world. This is Mike, the FX boss. Maybe not your boss, right? And today we're going to learn, everybody, hello, how are you? And welcome to lesson 18, how to trade support in an uptrend, alright? Never forget, trading is a learnable skill. What is he saying? I'm moving the mouse. Trading is a learnable skill when you learn, not if you learn, when you learn in the correct way. Alright, so Forex course 101, everybody, the institutional way. Alright, so my goal is to bring you from zero to a millionaire trader in 3 years on average. Alright, so never forget, trading is a learnable skill, but you are also learning how to bridge the gap between a retail way of trading and doing and thinking to an institutional trader way of thinking, and not to take too much time, but the institutional traders, we are groomed quite differently, how this market works. Maybe Forex course 101, the technical part, it's not that different, but then the business part, how money is produced in the markets, right? Never forget also, you're going to graduate from this course when, number one, you have your chart set up and ready for trading. Are you building your charts? Are you building your charts, student trader? Are you building your charts? Okay, so don't freak out. Today we're going to use the JForex charting software, not TradingView. Alright, it's for free, don't worry. So number two, you have a strategy in place. You understand how you win, how you lose. Okay, something to work on it too. And number three, you have a complete understanding on how this market works, so you can analyze the market and make an educated prediction. Alright, please disclaimer, this lesson, it's not trading or investment advice. Alright, you are here to learn. Okay, something I'm doing, something, and you are copying and you are thinking, this is no trading or investment advice. Alright, nonetheless, you need to build your own strategy. Alright, and for questions and homework, you have my Gmail, and for other business extra webinars, seminars, we are using Skype on Zoom. And if you didn't receive the manual yet, which is part of the course, okay, so professional Forex traders course, Forex course 101, the learning phase, Forex course 2.2, it's about the business, it's the money phase. Alright, so it's part of the course. If you didn't receive the free manual, send me an email to mikefxboss@gmail.com. And if you didn't receive the little book of trading secrets with this beautiful guy, then please visit. Oh, I don't have it in here, I'm sorry. So I'm going to put it, it's a website, alright, and there is a pop-up, but okay, so for this time, just send me an email. I can send you the ebook too, alright? Now, without further ado, welcome again to the lesson 18, how to make money, how to trade support in an uptrend, how to make money trading support in an uptrend. Alright, and we are on AUD-CAD. Alright, so theory first. Are you building your charts? Are you building your charts, everybody? Student trader, are you building your charts? And remember, talking about the manual, where is the manual? Here is the manual. Talking about the free manual, we are in module 2, called timing and retracement trading, right? So, how to trade support in an uptrend, how to make money with the trading support in an uptrend. Basically, what we're trying to do in here is theory first, right? This is going to be an uptrend, right? Making higher highs, higher lows, higher highs, higher lows, higher highs, alright? And we've learned in the previous lessons how to extend an uptrend line, maybe something like this, changing colors. Okay, now timing and retracement trading. So we are going to discuss now what happens in here, right? Talking about the market wave theory, you've learned that after the extension, what must come? After the extension, there you go, a retracement must come, alright? So you can expect that me and you were all the same, so we can expect that we don't know how, we don't know when, but we do know that sooner or later the market is going to do something like this, agreed? Is going to reverse. So this is just, those are straight lines, you know, to make the education or the transfer of knowledge easier. Okay, now when the market is an extension, we are expecting a retracement, right? And we are going to put a vertical line like this, maybe a little bit. Okay, and how to chart support and resistance. Support and resistance are the only tool that you are going to chart from the center or the right side to the left. Okay, when we chart trend lines, example, I'm going to draw the trend line here and I'm going to extend it from the left to the right. Okay, but charting support and resistance, this is the only tool that you're going to chart in the opposite direction. Okay, now how does charting go? You start from the high and then you go left, and when you spot a high, you know, you scroll down. Basically what you're doing, you're building a set of stairs. Can you see how this works? And you're building a set of stairs. Okay, so now this would be, changing colors again, this would be the level of past support. So when the market starts, we're going to go in the live chart too, don't worry. So when the market starts to retrace, making lower low, lower high, lower low, lower high, lower low, then in order for us to make money, we need to increase the probability. Probability is the name of the game here. Okay, so I'm going to predict that the market is going to fall somewhere down to here. Remember, support, resistance, pivot points, we've learned in lesson 17, are not lines to the pivot. Never forget, those are areas. Okay, so I'm predicting that the market is going to come down to here, or I'm going to predict the market come down to here in this example. All right, and the market is moving and moving and moving, and here maybe the market is going to change the direction of the short-term trend. So this is going to, if this would be the case, counter trend line we've learned already, if this would be the case, give me a second, there you go, then this would give us a higher degree of a higher degree of probability, right? Now pay attention to this. We have a concept says when and if the market breaks the first level of past support, then the market tends to gravitate to the next level of past support. Okay, it's a concept, it's a trading charting concept that you must learn. If you want to increase your probability, you must learn this concept. Boss, can you repeat please? Yes sir. When and if the market breaks one level of past support, like in here, then the market tends to go to the next level of past support. Okay, now good news, bad news. What's the good news, what's the bad news? Spatially, bad news, spatially, what does it mean spatially? How our brain processes information on the chart. Spatially, when this happens, we would see or feel like, oh, the market is changing direction. Oh, the market broke the trend line, and it did. Oh, better to sell. Oh, now I'm going to sell. Wait. The market did break the uptrend line, but if I change the color of the uptrend, did the market break the pattern? Did the market break the pattern? So if this is the relevant low, and I'm going to delete this for this exercise, and this is the relevant high of the uptrend, and this is the relevant low of the uptrend, and this is the relevant high of the uptrend, and this is the relevant higher low of the uptrend, even though the market retraced down to here, did the market break the pattern? There you go. Is this difficult to understand? Congratulations, sure. No, it didn't, right? No, it didn't. For the market to break patterns, must break relevant lows and highs of the pattern. It's that simple. So, because past resistance and past support are areas, it happens time to time. You need to study the chart, building your emotional strength. It happens time to time that the market is going to break the first level of past support, is going to move further down, deep retracement, is going to come to this level. Sometimes it goes for a pip or two, but it didn't break the pattern. The pattern is still there. Does this make sense? If you don't pay attention to this, when the market is going to retrace, then most likely you are going to short the market. You are going to sell the market. Does this make sense? Spatially, your brain is not going to see and understand that, oh, the green uptrend is still in place, but spatially your brain is going to say, oh, we are making lower lows, lower highs. And we do, but as we learned from the previous lesson, this is a retracement on the pattern. The orange price action is the retracement on the green uptrend. This is how this market works. Okay, you must learn retracements and don't confuse patterns, because we do have patterns inside patterns. All right, like in here, relevant highs and lows are the borderlines and confirm or violate the green uptrend. The orange price action making lower lows or highs, and you have also extending, retracing, extending, you know. So if you sell in here, you are trading against the market. Does this make sense? Oh, but it's going down. What about the green? What about the green uptrend is the question. Okay? As a retail trader, you must learn, this is the way how an institutional, how a professional trader sees the market. Okay? You must learn to understand when you see different patterns, when you see different price action, you must learn, this is a skill that you can learn. You must learn to understand, all right, what is driving what? Does this make sense? And who is stronger? What is driving what? What pattern is driving what pattern? And what pattern is stronger, right? So in this example, what is driving what? The green uptrend is the driving force. How do you know? Because it was first. Does this make sense? The market provided us with the green pattern first. Now, the orange price action is the reaction to the green pattern. So the green uptrend is the driving force. The green uptrend is stronger. Does this make sense? I know it's a difficult lesson. You know, we're going to just make it simple as possible. Download this lesson, rewatch it a few times. Okay? Now, does this make sense to you? The green uptrend is the strongest force, and the orange is the reaction to the green uptrend pattern. Okay? So if you sell in here the orange, you are trading against the market. Okay? What does this mean? This means that you are going to win 3 times out of 10. You can win, but you are going to lose 7 times out of 10. Okay, this market, it's mostly statistics, probabilities, it's a numbers game, it's all math, it's all logical, it's all common sense. All right, so if you short in here the orange, it's nothing wrong with the trade, but it's lower probability because the green is the driving force. Does this make sense? Now let's go to a live chart and let's see how this works. So we are on AUDCAT daily chart, okay, and we are going to use this uptrend in here, okay? So do we agree, dear student trader, do we agree that the market broke this downtrend line? And remember, those pivot points are from the monthly chart, all right? This is just an example. You had a homework, build your charts with support, resistance, pivot points from the monthly. This was the homework. Did you do the homework? And then you want the Lambo and the Ferrari, you know. Oh, boss, teach me how to make money. Did you do the homework? Okay. Now, if we agree that the market broke the downtrend line, so below the downtrend line, the market was making lower lows, lower highs, lower lows, lower highs, right? If we agree on that, then we are going to wait for the market to offer us the first swing. This is charting, okay? We are going to wait for the market to offer to us the first extension, retracement, extension. So the starting point of the uptrend is here. This is the lowest low of the sequence, and then goes low to high, high to low. We're not going to chart all highs and lows, make sense? But just the most relevant, okay? This is not relevant. We've learned what are relevant highs and lows, okay? So that's not a high, not a high. That's the high, that's the low. A trend is a sequence of highs and lows. We've learned all of this. That's the high, that's the low, and that's the high, okay? So, and we're going to get rid of this. And we can chart. Don't worry if you're on TradingView, use TradingView, it's all the same. Okay, now if this is the chart, okay, now I'm going to go from right to the left and I'm going to build a set of stairs. Remember, those are areas. You don't need to be perfect in charting, you know, but just spatially I'm going to understand that. All right, give me a second. And orange maybe, there you go. So I'm understanding that the green is the uptrend, the orange lines are areas, okay, of past support. So I am predicting that the market is going to reverse, okay, at past support. Now let's see how this is going to play out, okay, stay with me. So I'm going to zoom in to see the candles. All right, so it's moving down, sideways, going down, you know, and bam. So this is the bullish candle, you know. We didn't run candlesticks yet. This is coming next. And market is moving sideways, another candle, and here we can connect those two. So this is what it's considered a counter trend line break. Okay, just an example. Okay, so now this is the uptrend making higher highs, higher lows. Now here we have an issue, don't we? High to low, low to high, and then I don't know because I don't see more in the future, right? So if this is the uptrend, now are we still in an uptrend? See, before it was theory, now it's live market. So relevant low on the green, relevant high on the green, relevant low on the green, relevant high on the green, relevant low on the green, relevant high on the green, relevant higher low on the green, relevant higher high on the green, and then lower low. So if I buy this counter trend line, am I buying an uptrend? Am I buying an uptrend if I buy the counter trend line? If I buy this bullish and engulfing candle, we didn't learn candlesticks yet. Okay. Are we buying an uptrend? No, the answer is no, we are not. Because the rectangles signal relevant highs and lows. Okay. This doesn't mean that the market cannot push up. But if I buy seeing lower lows, lower highs, okay, then I'm lowering the probability. This is, you're going to give yourself, I'm telling everybody, give yourself a year to learn. Forex course 101. Pat yourself on the back, pat yourself on the back, give yourself a year to learn. Forget about the money, give yourself a year to learn just how this market works. Does this make sense? You are trying to understand. When you are ready to go to the Advanced Institutional Trader Program, I'm going to tell you when you can explain your winners and your losers. Not before. Does this make sense? You are going to become a junior trader or a senior analyst once you have a losing trade, and the losing trade, it makes sense to you. It has a structure. You say, oh, I lost and I know exactly why I lost. It was lower probability trade. Or, oh, I won and I know exactly why I won. It was a higher probability trade. Or, oh, I won and I know why I won because it was luck. Does this make sense? So, if I buy here, it's a risky trade because I'm buying a downtrend. So I'm not going to buy a downtrend as a beginner analyst, junior. You're not a trader yet, you're an analyst, the institutional way. Okay, we all start as junior analysts, so I'm not going to buy here. Remember, the market can go up, the market can do anything. So I'm not going to buy in here. I'm going to monitor the market, monitor the market, monitor the market. Okay, I'm waiting for the market to come back up to the uptrend and monitoring the market, see what happened, see what, oh, you are a genius. This is all common sense. I'm just following strict rules. I'm not doing anything special. Okay, so charting high to low, low to high, right? And now, so from here, you know, now the market made again higher highs, higher lows, right? So if this would be the case, I'm charting in here, give me a second. So high, higher low again, and higher high, right? So see how the market it's fluid. It's a consequence. It's a sequence of highs and lows. Can you see it? Lower low, lower high, and then higher high, higher low. Can you see it in here? Lower low, lower high, lower low in here, and can you see lower low, lower high, and then you have basically two patterns in one, right? And from the short-term downtrend, well, this is really a higher low in here. So from a short-term downtrend, not confirmed yet, fair enough, 75%, it transformed to the uptrend, right? Now, if I'm buying, let's dissect this, stay with me. If I buy this one, all right, did the market react to past support? Well, I would say it didn't because it's in the middle. Okay, this doesn't mean that the market cannot go up. You must learn these things, the way how you think. Okay, but I'm waiting and I want to increase my probability of success. Okay, so I'm going to enter at past support. Okay, so I'm not going to enter here. And if you do some of your advanced, you might be advanced, risk less. Okay, when you know that probability is lower, risk less. So me, I'm not going to buy in here. Okay, fair enough, I saw the chart, fair enough. But I'm going to buy, you know, so higher highs, higher lows, right? I need to chart again. So high to low, low to high, high to low, low to high, higher high, but then lower low. See how it changed again? We are in a downtrend again, breaking highs and lows. So the market is down. The market did not react to the first level of past support, did not react. So most of the time the market is going to push now down to here, all right? It's a concept. And by the way, I'm still monitoring highs and lows, and I'm going to monitor also the trend line. Okay, so this is the trend line. I'm monitoring the market, I'm monitoring the market, I'm monitoring the market. See what the market is doing? See what the market is doing? It's going to the next level of, it's going down to here now. So I'm monitoring the market and now it hit the level of past support. It's breaking or not, you know, it's an area. So I'm waiting and waiting and we're monitoring the market and bam. The market broke the downtrend line and me charting low to high, high to low, low to high, high to low, low to high, high to low. Okay, now I need to wait for the first swing and then I'm going to buy. Okay, so now we have low to high, high to low, low to high. So the market is again in an uptrend. Congratulations to you. You might be, some of you, or you might be thinking, oh, can I buy before? You can. It depends on how aggressive of a trader you are. Make sense? So if you want to buy the market in here, this means that you have no confirmed uptrend yet. You have the first low, the first higher high, then you have the first higher low, but you have no higher high. Okay, there is no right or wrong anyway. So we are here, we have an uptrend, confirmed uptrend. Again, if you want, set of stairs, left, down, left, down, left. It's an area. All right, let's color code this in blue. Yes, you need to chart. And so we're going to enter next on the next past support, right? So it's going down and maybe not the best one, you know, maybe not the best candle. White, one more, not good, one more, consolidation, going down, and here. So this is the counter trend line break here again, and the market reacted to this past support in here. Can you see the blue? We've charted a set of stairs. Okay, we've charted the stairs. Fair, and again, fair enough, you know, the market did break the low again in here. Can you see it? This low, circle, this low, it's lower than this low. Okay, so we need to wait again. And now it's going up and sideways and broke the low again. See? What happens when we follow rules? We are going to get stopped out less times. Okay, so broke the low again. I'm waiting for higher highs, higher lows. And I'm waiting for the next retracement. And We are here right now. So low to high, high to low, low to high, high to low, low to high, right? Set of stairs. Yes, this works on all time frame. Set of stairs, set of stairs, set of stairs. Okay, now let's see how this is going to play out. Now this would be 1, right? Because it's an area. Okay, now this would be a counter trend line break with this candle closed at this area here, right? Now we are at pivot point 2, but this is past support, the first one. Okay, we are going to enter here, stop loss below, a few pips below the pattern that we are trading. What is one of the cardinal rules of the Forex course 101? Stop loss goes on the pattern traded. Say it with me. You're going to be sick and tired, but it's for good. Stop loss goes on the pattern traded. Stop loss goes on the pattern traded. Stop loss goes, yes, but there is no but. Stop loss goes on the pattern traded, period, end of story. If you want to learn from me and in the future work with my partners, for me, with me, whatever. Okay, this is one, and if we're going to risk €1, $1, $1 Bitcoin, we are trying to get to €2, 2 Bitcoins, 2 Ferraris, right? Okay, now we're almost out of time, so let's see how this is going to play out, hopefully. So the market is going up and down and up and sideways, you know, a little bit of consolidation. And moving up, you know, and moving down, back down. So trend, uptrend, extension, retracement, high, extension, retracement, extension, retracement, not a relevant high, but this is not a low, so here, this is then the next uptrend, you know, and bam, you know, it's almost stop us out and reversed in here. Okay, so uptrend, higher highs, higher lows, higher highs, higher lows. I believe no lows in here. That's, but this is not a high also, so that's not a low, not a high. Okay, so this will be the way to go. Oh, but we have a loser. It's all right. Remember, you should not bother with winners and losers. You should bother with the process. Okay, retail traders are bothered with, oh, but we lost. You are going to lose anyway. Make sense? But not 10 times out of 10. If you follow the rules, you are going to win 7 times out of 10. Follow the process. Does this make sense? Now, moving forward with the manual, of course, up in here, you know, but this is knowledge. You need to learn how, you know, the market made us all of this of profit. Of course, we are not going to let this profit become dust. So there are other techniques, you know, how cancel and replay the stop, you know, for your winner not to turn into a loser. Does this make sense? But step by step, makes sense? Step by step. Okay? And even if you lose one, and you are going to lose, we all have losers, okay? But in order to make money, you must win. You're always going to have losers, but you know, when you make money, when you win more times, right? So you had one loser, me, we had one loser, but how many traders would have multiple losers in here, because here they would enter here again and again and again? Remember how many times the market stopped us out? 3 times. All right, so this was the low, lower low in here, higher high, lower low in here. We were stopped out 2 times in here. All right, so we were following, and this is what retail traders do. All right, retail, if you want to, it's a great note to make. Great note to make. Retail traders are chasing the money. You can write this down. Retail traders are chasing the money when institutional traders are following a predetermined process. I mean, that's a huge difference in understanding. Professional traders, institutional traders, we have losing trades too. More the advanced course. Professional traders, institutional traders, we have drawdowns too. Make sense? It's not just flowers and roses, you know. And the understanding of risk, it's a big one, you know. Institutional traders, we are groomed differently than retail traders. Not judging anybody, this is a fact, you know. It's knowledge. Okay, the understanding of risk, that you cannot draw down 5% and expect to make 50% per year. This does not exist. Boss, can you repeat please? Talking about risk and losers and drawdowns, a retail trader common way of, maybe not you, but a retail trader common way of thinking is, oh, I'm going to have a 5% drawdown and I'm going to make 50% per year. This is unrealistic. Okay, it's never going to happen. Never ever. You can call me out. I'm here. All right. What is the common standard in this industry? It's 1 per 2. If you want to make 20% per year, then you must allow 10% drawdown. If you want to make 40% per year, you must allow 20% of drawdown. This is the industry standard. Does this make sense? Risk equals opportunity. You cannot expect risking 5% drawdown, the maximum loss on the account, and expect to make 70% per year. Unless you're doing something stupid and you get lucky with one trade, you know, one that you're risking 80% of your account, but you know, this is not replicable, not doable. This is not professional trading anyway. Professional trading, it's you are doing the same boring stuff over and over and over again, and your account is growing, you are making money. When you become a professional trader, it's too soon for you to believe me. I understand this, it's not a problem. You know, is that professional trading, it's boring, it's tedious, it's not fancy, it's not glamorous, you know, from the movies. Professional trader, you know, making money, it's boring, it's always the same. I get it, it's too soon, but you're going to remember this lesson, you know, 1 year from now. Oh, Mike was telling me, you know, it's tedious work, you know. And okay, so thank you very much. See you next time, see you in the next lesson. And if you find value in these lessons, give it a like, subscribe to the channel. This is Mike, see you tomorrow with another lesson. See you, thank you, bye bye.